There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.
Hi everyone, today we're going to talk about if you can tell when a bear market is going to happen. Now, there is no one in the world that can accurately predict precisely the moment when a bear market is going to start. However, there are many ways to see one that is coming. A lot of times what happens is people get so excited because there's all these opportunities in an investment or a financial market. It doesn't just mean the stock market, the real estate cycles. We have a real estate boom in some areas of the country right now, and that real estate has become a bubble, and at some point it's going to collapse. But right now everybody thinks that it's going to go on forever or several more years. But there are also signs that the real estate boom is weakening. And that's what you want to look for when you want to be concerned about whether an investment or an area of financial markets is on the road to becoming a bear market, is you want to look for those signs and symptoms that would point to a problem in the future so that you can prepare and be ready, rather than trying to wait for somebody to predict that the market is going to collapse or real estate is going to collapse, that you have already mitigated or adjusted your risk. Everything cycles. The real estate market cycles, commodity prices cycle, gold prices cycle, stocks cycle. They have businesses and the businesses cycle, and so the stock cycles, the economy cycles, everything has a cycle. It's how things go. What goes up will come down. What comes down will go back up. The key is not trying to predict accurately the day of the event, but to plan and prepare ahead so that you're never taken by surprise. You don't have to predict anything. What you have to do is see the symptoms of weakness and begin to mitigate your risk and take action before it happens so that you are fine when it does happen. But that's not what people do. Unfortunately, today our society has become such a knee-jerk reaction, instant activity and impulsive activity, to the point where no one ever plans anything. Everything is impulsive. Everything has to happen right now. There has to be instant gratification, and that's a very bad way to approach investing or trading. You're going to lose if you do it that way, and you will lose big time at times. A bear market is a natural part of the stock market or financial market or real estate market cycle. It's healthy because it brings things back into adjustment. If you know that there is weakness in a financial market, such as the real estate, then you can start planning to do things that will help you avoid any huge losses. It's not about trying to get out at the top or timing the market or timing the real estate market. You can't time it because there are so many components that affect a cycle that there's no way to accurately predict it. Think about the weather. The weatherman may say a 30-day forecast, and by the time that 30 days actually arrives, it's a completely different weather pattern than what he stated, especially if you live on the West Coast or the East Coast. Think of the hurricane, how many times they had to modify the trajectory path, and even then it wasn't as they thought it would be. There are all kinds of variables. But what you can do is you can know that a hurricane is coming. And then you can plan and prepare what you need to do to protect yourself. Because bear markets are like hurricanes. They happen rarely. They are short-lived. And then when it's over, it's time to rebuild. Those people who prepare and plan ahead before a bear market or a hurricane occurs often come out pretty much unscathed. They are able to recover and rebound very rapidly. Those who really plan and are really prepared and are really settled in have minimal impact no matter what happens. So it's not about predicting, and it's not about all of a sudden panicking and then trying to get out of stocks or real estate or whatever you're in, but recognizing the symptoms. There are always symptoms before anything crashes. There were symptoms in 2006 and 2007 that the real estate market bubble was going to burst at some point, that something was terribly wrong with the whole entire structure. There was too much money pouring into real estate. Houses, which are a long-term investment, which most people have 30-year mortgages on, were being flipped every couple of months. Prices were off the charts. People thought it would go on forever. As soon as you hear this, oh, it's going to go on forever, or it's going to go on 3 or 4 more years, you need to be very, very suspicious, because every bull market, regardless of where it is, real estate, commodities, futures, the stocks, bonds, always grows and develops on a fairly negative stance. People are somewhat negative about that investment. People are reluctant to get into it. The common people are always wrong. So whatever the general public thinks, you have to be contrarian, because the general population doesn't understand the financial markets, doesn't understand anything about investing, and so they're always going on impulse and reacting on a knee-jerk reaction to something that has already happened. What you want to do as an investor or trader that's highly successful and is financially independent and secure no matter what happens is to make sure that you don't follow the crowd, that you don't listen to the crowd. And if you do listen to the crowd, you say, aha, they're thinking that this real estate boom is going to go on to 2023 or 2024, but already there are cracks and chinks in the real estate cycle. Prices are so high it's ridiculous, and there's too much slush money running around. There's so many symptoms that is it possible that it could last another 6 years? It's completely off the charts in a normal cycle. So you say to yourself, is this a good time to buy real estate? It's overpriced in some areas, especially in the Seattle area. There's been a housing boom here for a long time. It's been instigated by an artificial price hike. A lot of people swept into Seattle, so the inflow of money to real estate for Seattle is going to dry up and blow away. Meanwhile, prices are sky high. Apartments are off the charts. They're too expensive. People can't afford them. And so what's going to happen at some point is suddenly, when the buying just dries up, the price of real estate is going to collapse. Not nearly as severely as it did in 2008, because that was a much more severe bubble. But it will contract, and there's overconstruction. There's more construction going on than there are people who will be able to buy those homes or rent those apartments. So there's all kinds of symptoms. So what do you do when you see symptoms like this? You don't get caught up in the hype. You don't get caught up in the, it's going to last many more years. It's just going to keep going up and up and up. You got to buy, you got to buy. Anytime somebody says you've got to buy, you're in a bubble. Now, yes, stock prices or real estate prices could move higher. But if you buy now, when it does collapse, in the real estate market in Seattle in particular, you're going to be in a losing situation. You're going to be underwater with that mortgage. Already people have forgotten the banking debacle, the fiasco with subprime mortgages and all kinds of things like that. It's a tragic thing that we just keep repeating and repeating the same thing over and over again because people forget, or a new generation comes up that doesn't have any experience and doesn't know that this is what can happen. For the bear market and the stock market, what we're looking at is definitely that we're seeing that ETFs are becoming more and more and more popular. And the way that they're constructed and how they're constructed and how they impact stock prices is a big deal. And it is a big area that is actually a very high risk area right now for a lot of people who don't know what they're investing in. They have no education. They have no experience. They just buy because somebody tells them it's a great thing. And, oh, this is a great investment. You can get out of it right away. You don't have any redemption time. The things are going up and up. They're going to get more and more valuable. You need to buy this. And you just say, okay, I'll buy it. And you have no foundation. You have no education. You have actually no plausible reason to buy that instrument or derivative or mutual fund other than that somebody is encouraging you to do so and telling you it's okay. But do they know what they're talking about? A lot of the new franchisees that are out there that are neighborhood brokers don't have any experience in the financial markets and do not have a financial services degree. They're not even registered or licensed other than basically to sell funds to you. So they know absolutely nothing. If you go in and talk to a financial professional, ask them for their credentials, ask them for their experience. How long have they been doing this? Get some facts before you start trusting these people. The next stock market crash, which we can't predict, but we can see that there are certain things that are starting to develop that eventually will, over time, not immediately, result in a correction. Now that correction can be a short term, it can be a trading range, it can be an intermediate term, almost a year long, or it can be a bear market, 1.5 to 2 years long. Bear markets do not last very long. And there are lots of signals. Usually there's euphoria, there's everybody's got to buy, this is a great new investment instrument, you should get it even though it's super high risk and you don't understand what you're investing in. There are symptoms. So you have to be careful. You have to understand what's going on. It's more than just using MACD or a couple of candlestick patterns. Think about if you have a teenager or you know some teenagers and how often they take really high risk because they don't understand the risks they're taking. They'll drive their car fast, or they'll ride motorcycles fast, or they'll go rafting on a whitewater river without a life jacket. They'll do things that are extremely high risk, and it will cost some of those young people their lives. The same thing is true of new investors. They're often like younger people because they don't understand everything they need to know and they have no idea. They get a little bit of information and they think they know so much that they're able to make these decisions. And what they don't realize is what they know is a few grains of sand in a vast ocean of sand. And there's so much more information that they need to know that they don't know. It's not available on the internet. Not everything you need to know about investing or trading stocks is available free on the internet. Yes, there's a lot of stuff out there, but there's a difference between information, knowledge, and using that knowledge to gain experience to be successful. Most people have a good amount of information, but they have no knowledge. They don't know how to apply that information. And even fewer people have that knowledge that have used it with experience with a simulator to practice, to gain experience, to actually be able to use the knowledge in a live format in a financial market. And that's where we come in. TechniTrader knows that most of you have a lot of information. I know you have a lot of information, but you do not know how to apply it. You do not have any knowledge on how to actually successfully apply it in a process that will work. And most of you have very little to no experience. A handful of trades is not making you a profitable day trader. Sure, you can go to a 5-day class and learn how to enter orders and some basics about MACD and some basics about candlesticks. But that is not enough to make you successful. That's like the teenager who has just gotten their driver's license and goes out and starts driving on the freeways and in rush hour traffic. They have no experience in rush hour traffic. They have no experience driving 500 miles to a place they want to see. They don't have that experience, so they're going to make mistakes. And those mistakes can be deadly. Same is true with stock trading, day trading in particular, and investing long term right now. You need to know more than you think you do. You need a foundation of education that is not available on the internet. So if you're really serious and you really want to learn how to be consistently successful, visit us at technitrader.com, check us out, sign up so that you can get further information, study our stock courses, and then give us a call when you think you're ready to discuss what your needs are. I'm Martha Stokes, and that's the radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who have taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.